the CME Group Chairman and CEO Terry Duffy. Always good to have you, Terry. That seems to be China's way of saying whatever you were able to cobble together with Europe, do not assume you can cobble together anything approaching that with us, which means with China, this goes on and on. What do you make of that?
You know, Neil, I don't know what to make of it, but, you know, we have multiple trade agreements around the world today, so I'm assuming what the Chinese are just saying is whatever you work out with Europe, just don't think it's applicable to us here in Asia as well. We want to have our own trade agreements with you and the U.S. and everybody else. That's the only thing I can make from that. I'm not on any inside baseball, don't know. I'm here to manage the risk of the different issues they have with tariffs and price dislocations, not to determine trade policy. So I think it's, you know, I'm not surprised to hear what the Chinese are saying, because I'm sure they're very concerned that they are going to get painted into a situation where they don't get a chance to negotiate a trade deal. They are being told a trade deal.
Yeah, I don't know how that's all going to work out, to your point, Terry. I'm wondering what's been the fallout in futures trading and some of the related products in which you exchange deals. I'm talking, you know, soybeans, all these agricultural commodities, even liquefied natural gas, which we're told the Europeans will be buying more of down the road. How is that going?
It's going actually really well, Neil. As you know, we are the benchmark price setter, especially on the grain products here in Chicago for the world. But we are seeing some dislocations, to your point, where the Chinese are buying more beans out of Brazil right now. So the price of soybeans out of Brazil is inflated, but people are trying to manage that risk in Brazil in the U.S. market. But then there's a glut of U.S. beans here, so the prices are a little bit more depressed. You know, farmers, you know, they have planting intentions. They go forward with them, thinking there's going to be an export number that they have to achieve, and then all of a sudden, you know, one of your biggest clients decides to go to another country to buy the product. So, you know, we're looking at $8 beans here roughly in the U.S. and a different price in Brazil. So it's a little difficult to manage that risk, but people need to do it because no one knows where this is going to end up.
You know, the president, as you know, Terry, is in Iowa today, and obviously that is a state with key agricultural concerns and worries. The president has offered $12 billion in relief to sort of ward off the effects of coming tariffs. And many who are feeling it right now. Others have criticized that, saying it has made artificial the very things the president wants to address in his tariffs period. But what has been the fallout on your exchange as a result?
We haven't really seen much of the fallout. Now, our business in agriculture in July is down roughly 20%, Neil, but at the same time, we're coming off of a record quarter, last quarter in our agricultural products, record open interest, record trade in some of these grain products. So we haven't seen a giant fallout. July is traditionally a slower month regardless, so it's not a really good barometer to what's going on in the tariffs. What I think is pretty interesting, though, is you just referenced with Secretary Perdue announcing the $12 billion to the farmers, and I'm only quoting what I read in a story where one particular farmer said that won't buy me a tank of diesel by the time it gets to me. So it just goes to show you how large the U.S. agricultural market is, and these issues need to get resolved and not with just a subsidy coming out of the government. You know, it's interesting, too. I don't want to get too in the weeds here, Terry, but soybeans is a good example. You would have thought that they would have shot back appreciably on the notion that Europeans are going to be buying more soybeans, and then I come to discover that individual farmers and entities in Europe can do so. There are no restrictions placed on them in Europe anyway, and it wouldn't come close to making up for what the Chinese are shutting down. So in just a supply and demand sense, what does that mean? Well, I think, Neil, it's a little premature to judge that just yet. I will say that we did see a bit of an uptick early this morning after the conversations of yesterday. So, you know, small, but we did see an uptick in the pricing and the activity. So maybe that's an indication that people feel comfortable that we will start to get more normalcy globally as it relates to the soybean market. But again, I'm not here to predict what's going to happen between the governments. We're here to manage the risk for those participants. Yeah, I just thought I'd catch you at a weak moment. So let me get... What you're good at doing with me. Well, I never know. You never know. Usually the end of a long day, and then you don't know. What did I say? Is it your sense that maybe, and this I'm just trying to get a lay of the land from you, that the president is maybe more pragmatic, flexible on this trade issue than his rhetoric would indicate, and that might
herald some good news. And one of the reasons why the market was up ahead of that announcement he had with the EC head was that that was in living color, so to speak. He showed a pragmatism approach that was very, very flexible and allowed both men to kind of save face. What do you think?
Well, I think what you just said is absolutely correct. And, you know, the way our president moves is obviously very swiftly and decisively. So whatever he was talking about with Europe, he obviously was able to come to a conclusion yesterday with the Europeans in town on the trade issue. So I don't think a lot of people saw that coming, including myself. I thought there would be more of a drawn-out process, but he has, you know, come to that conclusion already. So I think that's a good thing. So I don't want to say that it was just rhetoric. I think he was very serious in his approach towards tariffs. And I think there's a lot of participants feeling the hurt as it relates to these tariffs. But, you know, it doesn't really reflect in the numbers just yet because it might take a couple quarters before it reflects. So, but I do think the president's very decisive. And so I guess none of us should be surprised that when the announcement came out that he's going to go forward with the Europeans the way he's going to, then that, for the most part, is in the rearview mirror now, and that's the way we should look at it.
You know, there's the old adage, improving economy gives you improving markets give you an improving economy. You run a bit of a different beast here that could be a reflection more of maybe the inflationary environment too, or commodities and the appetite for them of all sorts. How do you look at that? With the economy likely to register strong growth in the second quarter when it's released tomorrow, that's the wind at everyone's back?
Well, I think that's very true, Neil, but I think when you look at especially the growth of my business, and you said it, I run a bit of a different business than, you know, a capital formation. I run a risk management business. And when you look at what we've been able to accomplish here, you can see that more and more people are managing the risk on our asset classes, because even though, you know, unemployment's at historic, 20-year lows or whatever the number's at, there's other economic factors that look very positive for the U.S. and the economy. There's a lot of people that, because margins are still very, very thin, need to manage the risk of those products. And that's what we're seeing here. So whether that's a barometer for which way the economy is going to go or not, other than maybe people just don't trust up or down, so they need to make sure they mitigate that risk here at CME.
Well, you've had double-digit growth in most of the asset classes that you represent. I think 5 out of 6 of them. So something must be going on.
No, there's no question, and I think that goes to what I was just trying to say to your viewers, is that I think people, as much as the economy is good, businesses still need to manage that risk, and that's where, we're the natural place for them to manage their risk. So, you may not manage 100% of your exposures, but for sure people are hedging up, 10, 20, 30, 40, 50% of their exposures just because you do not know. And a great example, Neil, is when February came along and the volatility clock ticked 12, nobody saw that coming. And so nobody could afford to let that just sit on their books and take the exposures when volatility rears its ugly head so quickly. And that's the way the world works today in all different fields. So speed is critically important, and people need to make sure that their risks are managed.
All right. Maybe next time I can get you to say something embarrassing, but you comported yourself very well today.
I'm happy to. We can keep this up. I'll say something.
Seriously, Terry, very nice having you. The CME Group Chairman and CEO, Terry Duffy.